All right, and welcome back from the episode of Carnivore Trades. Today is Tuesday, June 28th, 2022. If you like the content, give the video a thumbs up, subscribe to the channel, comment, let me know your thoughts. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, today we had a gap up, gap and crap, bull trap, whatever you want to call it. Pretty much textbook. So we gapped up, it'll surge, close below that opening range low, and then just sell, sell, sell all day long. Really just kind of a controlled sell-off. Sell program. Volatility didn't really spike that much. There was not a lot of volume, and yesterday I said when the volume's light, you generally want to give the market an upside bias. We had an uptick in volume this week, so that did turn out to be not a huge uptick, but generally when you go into these holidays, you expect light volume to bode well for the market. But sometimes you get surprises. This market has surprised us all year long, and it's been a tough market to trade, but again, not overloading yourself and being very careful, you can navigate this pretty well. In any case, what I think happened is a lot of traders essentially got onto one side of the boat, myself included. We were all kind of calling for a summer rally. The bears wanted a rally to short, the bulls wanted a rally to sell their longs into, and everybody just assumed that we were going to go right up into 400, maybe 408, and that was going to be the sell zone. And when it gets that easy, sometimes when it looks like it's going to be that easy, you got to be careful for basically the opposite to happen. And I think that's what we got today. You guys just taken the methodology course, this type of setup here. It's a pretty good sell signal. You can actually see it a little bit better on the diamond. And, admittedly, I didn't even see it yesterday. Now that I see it, in hindsight, it's pretty obvious to me. Wish I had jumped on that. But in any case, this market isn't necessarily cooked. We are going to have lower prices here. We will fill this gap on the daily here on the SPY. So around 378. Yeah, so 378 on the SPY, maybe down to 375, 373. We could even go down and test this lower trend line again, but this market still has the potential to put in a higher low. And as it sits right now, I have a pretty good idea of the type of setup we're going to put in. And, I feel pretty confident about that, but we've got to see a little bit more. I have to see what we look like going into the end of the week. But I've seen this type of pattern before, and we'll have to look at it a little bit closer. I do think we're going to pull back a little bit more. Obviously, we're not going to be able to bull flag anymore. We took out all of that move from Friday, minus the gap here, but all the cash session was erased. So no longer a chance for a flag, but there still is a chance for a higher low, and we'll see if we can get one here. But overall, kind of a weak showing for the bulls, all things considered. Anyways, here, so one of the positives is that the Russell, is down 1.88%, Spider's down 2, and Triple Q's down 3, and there's the Diamond there down 1.6. So Russell actually holding up relatively well. We talked about that yesterday. Russell was green yesterday in a down market. The other indices were down, Russell was up. And from a technical standpoint, the Russell's still pretty decently off the lows. So, when I see the small cap index outperforming the rest of the indices even on down days, that's generally a good sign. So that is a positive for the market. Obviously, we'll continue to monitor that. We talked about semiconductors, down 2.5, but they could have been a lot worse. The triple Qs are down 3. To see the semis down 2.5, that's nothing terrible. But again, really kind of a sloppy pattern. There are a few weak semiconductors. Qualcomm bucked the trend today. Apple did confirm that they're going to use Qualcomm chips for their iPhones. So that gave it a nice pop. You take a look on the intraday. Nice little surge there. Came off the highs a little bit as the market, really the whole market kind of just faded and made it hard for Qualcomm to really hold those gains. You can see NVIDIA here, really soft. Take a look at AMD. Inside bar bear pattern here on the daily and on the weekly. So you had that inside bar right there. Well, not necessarily inside bar, but a bearish pattern here. That broke down in your inside bar on the weekly as well. So AMD in a little bit of a weak spot. Micron came off the highs. We did close this one out today. I told you guys we were long. We did close this out for a small gain. They do have earnings on Thursday, and I don't think it's worth the risk holding it into earnings. But in any case, a little bit of a gain there. We did close that out. But again, semis not in the worst shape considering the action in the triple Qs, but overall, not a really good showing for the bulls. Now, again, there is chance. There are some other tech stocks, that have good setups here. Google, you got a potential for a W pattern, and if you pull back into that 2200 handle, you could put in a potential V. So you get a WV. Tesla, right around 675. I think there's good support there. That's also got a potential W. Apple, 134, 135. Microsoft, in that 250, 255 area. You've got these W patterns and they could play out. So there are, good bright spots here. Even XBI, biotech's been absolutely destroyed. This is holding up. It didn't take out that surge from last week, and it's still inside of that bar. So there are a few, bright spots in tech. We've talked about IGV, how that's been outperforming. It did fade Friday's gap up, but, it came well off the lows. So, if it can hold that 267 area, it can put in a higher low as well. There's a potential for a W pattern there also. So there are some good, areas in tech and in the market that can still hold up. But right now, I do think we need to test some lower prices. Dow transports here continue to remain weak. Faded that 20 moving average. I think this needs to go down and test 13,000. Moving on here to interest rates. A weak auction today, but no real follow through. The yields were up, 0.38% here on the TNX. 30-year here up just 15 basis points, so nothing crazy. They came off the highs. We had another weak auction, but they didn't follow through to the upside. So there is a possibility that the dynamic is shifting a little bit in bonds. You see the TLT again, not a bad pullback pattern there, and a little nice update. Did surge a little bit into the close, so maybe bonds can put in a higher low here and go attack that 120 level there on the TLT. We'll continue to watch that. HYG, again, another weak one. This is going to have to test 73.50, and if it gets through that, you're going down to 73, which is your double bottom. So really kind of cut and dry there. XLF looks like just like everything else, going up into that 20 moving average, getting rejected there. Broker dealers, same kind of thing, got through it a little bit, pulled back off the highs. It's worth noting that Morgan Stanley, Goldman Sachs, so some of the investment banks are outperforming, and they do look a little bit better than some of the money center banks. You see Wells and Bank of America there, JP Morgan. So some of the investment banks are doing a little bit better. So we'll see if that amounts to anything. But in any case, XLF financials looking just like everything else right now. Energy, crude here continuing to bounce, so back above that 50 moving average. I think the big test I told you guys is 115. If we get into that area, it'll be interesting to see how it reacts. If it starts flagging, then it can possibly get through that. But I think if you get into it kind of extended here like you are, if we get it up there tomorrow, we're probably going to see a pullback. And, again, my preferred scenario here is we take out this pivot and we go into correction mode. I still think there's too many. It's just a crowded trade. I think there's higher price floors in energy. There will be higher price floors for a long time, but markets need to go up and down. They have to correct. And I think there's just too many weak hands, and it's just too much of a crowded trade. So we'll see what we get, but that 115 area is going to be resistance. XLE was a strong horse today. It was very oversold. This really kind of helped the market pare some of the losses back as tech really sold off, growth sold off. Put a nice little back test there of that 100 MA, stalled out right there on the daily. Same thing with the XOP, little doji candle. Then the OIH basically stalling out essentially at that gap fill, but a nice day there for energy. It was very oversold coming off the lows. Nat gas, really would have loved it to get through that $6 handle, but it's getting a nice bounce anyway. Had a little bit of a dump around just before the COMEX close, which is not terribly uncommon, but it is recovering nicely in the after hours. So I do think this gets back to that 7 handle. And if it gets through that, about 750 is going to be pretty good resistance, but nice little bounce there for Natty. Actually, before we get to the dollar, I want to talk about some of these ag stocks. So Mosaic here, up in the down market here, again, oversold. You went through that 200, you got a little bit of a bounce here. I still think this has to go a little bit lower. Same thing with Intrepid, but these will be good buys pretty soon if we can get the right setup. I'd like to see them get a little bit lower on these ag plays, but I think we've got a good chance to get a pretty good long setup, especially on on Mosaic here. But we'll have to see what kind of pattern we get. We'll have to see if we can get to those levels, but they are oversold. And they're going into a lot of support here, but we need to get down to those levels first before we can enter them. But they are definitely on my radar. All right, so now dollar index again. I feel like every day here, it's kind of a nothing burger. Still in this tight range here. Got these lower highs. If it can break through that, maybe it pushes higher. let's not make too much out of it right now. We'll reevaluate it if and when it breaks through that 105 area. Gold, pretty much all the metals, again, nothing burger today, really just a tight range. Silver sold off a little bit. Platinum got a bounce, faded off the highs, and palladium also kind of a nothing burger there. Copper continuing to dead cat bounce, so it's trying to bounce here, but it can't hold those gains. So, you know, it made that high yesterday, faded off the highs, tried to, you know, it did make a higher high to its credit today, but then faded back down and it's closing down in this area. You really got to get above this red bar on a closing basis if it's going to have any legs. Otherwise, I think that this can get down to the 360, maybe even 350 area. So copper remains weak. We'll see what we get here over the next couple of days, but I'm not in love with it at the moment. And then finally here, crypto. So Bitcoin, again, we talked about this yesterday, how it didn't even get to the 20 moving average and it started to roll. At this point, you know, it's going to go down and test 19,800. After that, you got 19.3 and 18.8. So those are really your short-term levels. Again, there's still a chance that this can put in a higher low. And if it does, and you make higher highs and you get back above this 23,000 area, it can have a nice little rally, maybe a short squeeze or something like that. But it's just so tough right now, again, with all the news every single day of these desks blowing up or funds getting hacked or these coins failing. You know, nobody wants to put their money in this, you know, in crypto, especially when we're already in a bear market on top of that. So again, I'll give it the upside bias if you can put in a higher low at any one of those levels. But right now it's definitely on the softer side, and you know, we'll just leave it at that. Anyways, here, so again, spiders, I think tomorrow we at least fill that gap, but we'll look for potentially a daily higher low. You know, I wouldn't rule out a move down to 370. You know, it's a little bit of ways away. It's 10 points, but we can get there, you know, with the VIX at the levels that it's at. Even with the VIX below 30 now, it's still at 28. So there's a lot of volatility in this market, even going into the holidays. You know, I thought that, you know, generally when you have light volume, you get way less volatility. That's usually the case, but this market continues to surprise us. And again, just take it one day at a time. Don't go too crazy here. Anyways, guys, going to wrap it up here. Take care. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.